Hello, in this lecture we will define leasehold. According to Fundamental Accounting Principles, Wild 22nd edition, the definition of leasehold is rights the lessor grants to the lessee under the terms of a lease. So when we're thinking about the leasehold, we're thinking about those lease terms, the lease being involving a piece of property, two people involved, at least two parties involved, one being the lessor, the owner of the property who is granting use to that property, one being the lessee, the one that is using the property but does not have ultimate ownership, meaning the property will revert back to the owner, the lessor, at the end of the lease period. The idea of the leasehold are the actual rights the lessor grants to the lessee under the terms of the lease, which generally will include the use of the property in the lease. So if we have this piece of property, the leasehold is going to be the granting from the lessor to the lessee of the use of this property for a certain time period in exchange for rent for that time period. So as that time period passes, then we're going to have the rent that will be accumulating going from the lessee to the lessor. At the end of the term of the lease, then the property will revert back from the lessee to the lessor.